Hello and welcome everyone to another weekly market commentary from StashAway. Of course, with us, our Chief Investment Officer, Freddy Lim. Freddy, how are you?
Hey, Philip. Yet another week has passed. Lots of questions, I can tell.
I know we kind of gonna not have a real market update, but it will come automatically by the questions because we did get quite a good amount of questions that I think most people will be asking themselves after the last 7 days. So we'll get into that here in a second. Before we do, though, I just wanted to ask anyone that if you like our show, if you enjoy the content, to please like the video, subscribe to our YouTube channel or our podcast channel so that you get the most updates on time. So please do that. On top of this, I also wanted to announce we have a new episode of our other podcast called In Your Best Interest. And in the new episode of In Your Best Interest that's out this week, you can find that in anywhere you can find podcasts, Apple Podcasts or all other Spotify, wherever else you listen to your podcast, you can find it there as well as on our website. And our guest for this episode is Henrik Loh. He's co-founded Hype Asia, which is a venture builder helping high-growth startups expand into Asia. He did this after leading the growth of Airbnb and WeWork here in Asia as well. So in this episode, Henrik shares with us his career journey and some of the hurdles in the road for startups looking to expand into Asia and the rewards that lay ahead of them if they do want to succeed here. So the link to the podcast will also be in the description box below as always. With that being said, Freddy, let's get to the meat of it. And let's start with Jason Lim. He had a question and he's asking, does the recent sell down in KWEB, so this is Chinese tech ETF for people who are not aware of this ticker symbol, has anything to do with the Section 230 that we mentioned last week when we talked about just tech sell-off in general, even in the US, right, Freddy?
Yeah, we talked about it in our show last week, and that's definitely a big cost for it because essentially now the antitrust measure is going to be ramped up on big tech. It's harder for them to not be liable for content posted by users. But as well, at the same time, there's other factors at play. We sort of know that we've been talking about this last year, Philip, sector rotation. We talk about the vaccine development being a big reason that can drive fund flows out of the pandemic winners like tech into the other more beaten down sectors of the economy from here, right? So I think that team is now starting to really be in a full swing because if you look at the numbers on my screen, small cap up. Let me just have a look. Small cap is up 22% for the year to date. Energy is up 41%. So the rotation is there. REITs are starting to turn around as well. So sector rotation plus Section 230, yeah, I would say is behind it. But I also would like to close with a statement that, we think technology fundamentally is a long-term theme, right? The disruption is going to bring is not just going to stop because the market is going to slow a little. Especially in China, we've seen the NPC, the National Political Party Congress. They came up with a next 5-year plan, heavily focused on rebuilding their own ecosystems for chips making, semiconductors, and of course the 5G global network build-up. Those things are not going to change.
Yeah, they're not going away, right? And I think, when you think about technology where it was, early 90s, then, 2000s, you have also these corrections. They're very normal in markets, right? So also within sectors. Doesn't mean that in the long term, they will not play out the way we think they will, right? So maybe it's even a good opportunity to put your money to work that was sitting on the sidelines. With that being said, Freddie, the next topic that came up throughout the questions from quite a few people is gold prices, right? So for one is Ji Tson, he's asking, inflation expectations are rising, yet gold prices have been trending down. One argument is that real interest rates are supposedly higher. What are your thoughts on this, Freddie?
I think let's simplify the problem. Inflation isn't really here. What we've seen in gold and the bond markets has told us that the market needs to digest a few things. First, the $1.9 trillion is about to be passed. It has to be paid for by long-term issuance of government bonds. Second, under Biden administration, $1 billion to $1.5 billion, $1 trillion to $1.5 trillion in clean energy in terms of grants and tax credits needs to be refinanced. Another $1 trillion will go to infrastructure bonds because they need to rebuild the very antiquated infrastructure in the US. They've never invested. They're now going to do so after so long. That's going to be another $1 trillion, right? So to us, is the news are already almost out there. So and yet we are here. We're not the word's not ending yet. So it seems like it's good news in that these things are now coming out. The market is digesting it. Now is the opportunity. The role of bond in portfolios don't just go away, and inflation expectations risen a little, but the main reason behind gold's drop was the rise in interest rate. The rise in interest rate was created by huge amount of government bond supply expectations.
Yeah, and that's actually the next question then, right? From Blue and Yellow Fire, the person is asking, hey, Freddy, Warren Buffett asserted into his latest annual letter that fixed income investors face a bleak future, right? And he's saying that bonds are not the place to be these days. So what's your take on that? And how do you see StashAway counter that or not?
There's a bit of truth for that in high yield bonds because the credit ratings are like they call junk bonds, right? And for taking that kind of risk, that kind of credit risk and market risk with a fixed income, with a fixed return, is sort of not a good deal for investors. You should always be in the stock market then and do it in a diversified manner. But there are bonds with protective qualities and in particular safe ones. And even if they don't yield anything today, when there's a big market crash, they will continue to function as protective assets. So we've seen it happen back in the 2009 cycle, the 10 years from there. European bonds, negative yielding, went more negative, right? They were zero, people were saying the same thing. Now they're minus 90 basis point, right? So it doesn't matter. Its role as protective assets remains the same. The only problem is you can't get fixed income out of them, right? So, but for us, as StashAway, it's about risk first, then return. You do what you can, but you fix your risk. You manage your risk first. That does not change.
Yeah, no, absolutely. Thank you, Freddy, for this. And again, thank you, everyone, for your questions. Really appreciate it. If you want your questions featured, please drop them down under the video below or send us an email to support@stashaway.com and we'll pick those up over the next couple of weeks. We do have also quite a few of webinars coming up. So if you want to learn more, you want to hear more from Freddy, there's things for you to look out for. So next week, for all of our regions, actually, Singapore, Malaysia, as well as the Middle East, we have StashAway's Market Outlook run by Freddy. That's on Tuesday, 16th of March, 7 p.m. Singapore, Malaysia time, and 3 p.m. Gulf Standard Time. So if you want to hear from Freddy more about his outlook, join that one. We also have a separate event for our Malaysian audience. It's called How to Invest the Right Way Using ETFs. That's on Wednesday, the 17th of March, 6 p.m. local time. In the Middle East and North Africa region, we have Investing for Women. It's on Wednesday, 17th of March, 1 p.m. Gulf Standard Time. Singapore, Bring StashAway to Your Workplace. It's a new webinar that we're launching. That's on Thursday, 18th of March, 12 p.m., so noon. We hope to see as many as possible of you. The sign-up links, again, are in the show descriptions below. We're looking forward to next week again, Freddy. And until then, we wish everyone a great week and good luck. Yeah. Bye-bye. Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.